Good morning, everyone. It's nice to see so many people here, which I think speaks to the general interest about healthcare, but also particularly about the employer-sponsored market. It's my pleasure to introduce the lineup for today, and I think it will be a fun morning. We had over 220 people RSVP to this event, which is really a statement about the level of interest. And I know part of that's in healthcare, but part of that is I think we've heard so much about the individual market and Medicaid repeal and expansion that people now are saying, why don't we turn to the employer market and talk a little bit about what's going on there. And so it's my pleasure to start this conversation because I think the employer market, as well as Medicare Advantage, are two markets that we can point to as evidence of what happens when you have a truly competitive, cost-conscious environment. And I think you'll hear a lot from the panelists today and from our keynote speaker this morning. My name's Marilyn Tabner. I'm the president and CEO of AHIP, and I'd like to welcome you to today's discussion. This event is part of a broader AHIP initiative to highlight the developments underway in the employer-sponsored market. We are grateful to be co-hosting today's event with the Bipartisan Policy Center, an organization that continues to foster and advance thoughtful bipartisan solutions to the country's most challenging issues. Their work has been invaluable to the healthcare debates on and off Capitol Hill and informing folks to the next phase of transformation across the healthcare system. Healthcare has always been a dynamic topic in Washington, and certainly last year was no exception. While much of the healthcare discussion has focused on changes underway in the individual exchange or in markets of public programs, we do need to recognize the significant role that employer-provider coverage assumes in our country. The impact of employer-provided coverage is nothing short of astounding. More Americans, roughly 180 million, depend on employer health benefits than on any other form of insurance. And as employers seek to deliver highly competitive benefits to an increasingly diverse workforce, insurance providers are working hand in hand with companies to offer wellness programs, worksite clinics, and tailored benefits. Together, we deliver improved health outcomes across the board. The country is focused on what we need to reverse the trend of exorbitant healthcare costs. Employer-sponsored coverage provides the roadmap for this initiative and how innovative preventive programs can lower costs and deliver value for both employers and employees. How well is the employer market serving Americans' businesses and employees? If you look at the data, it seems like, no pun intended, doing the job pretty well. 71% of Americans are satisfied with their current employer-provided coverage. Further, 56% indicated coverage remains a key factor in their choice to stay at their current job. With so many Americans depending on employer coverage for themselves and their families, it is all the more important to ensure that the program remains strong. And I look very much forward to this discussion on the steps we can take to improve and enhance employer-provider coverage for years to come. Today's first panel will be moderated by AHIP's EVP of Public Affairs and Strategy, David Merritt. During this panel, Lunch Global will present new data on public and employer attitudes toward ESI. We have several terrific panelists here to comment on the results of that data, and they will offer their own thoughts on the evolution of employer-provided coverage amidst broader changes. There will be a second panel discussion that will also explore new policy proposals and innovations related to employer-provided coverage. We are fortunate to have leaders on this panel who are working every day to find innovative solutions that improve the quality of care and reduce cost. But before we move on to those panels, we are very fortunate today to welcome David Cordani, the President and CEO of Cigna. David has served as President and CEO of Cigna since 2009, spearheading its transformation into a leading global healthcare company. He is a prominent voice in our industry and across healthcare. His vision has accelerated Cigna's focus and role in the employer-sponsored market. The company is advancing many groundbreaking innovations that have made a difference in the health of the people they serve. David offers a great multidimensional perspective. Cigna partners with small, medium, and large companies to offer employer-provided coverage and products that meets the needs of every business. Please join me in giving David a warm welcome.
Good morning, everyone. Wow, not enough coffee flowing this morning. Well, I'm the warm-up act before the very engaging panelists get together and walk through the topics that Marilyn had identified. First, let me underscore my appreciation for everybody spending some time for such an important topic to discuss both the current state and the future of employer-sponsored health care. By way of backdrop, to be very clear, I have a very positive point of view relative to the importance of the U.S. employer health care business, so you'll hear some of those views come through my comments. I thought we'd pause and go back for a moment because while most of you probably know, everybody may not remember how we in the United States ended up with an employer-sponsored healthcare system. It dates back actually post-World War II wage controls that were put in place, and employers actually seeking to compete and deliver value to their employees started to provide employer-sponsored benefits. Fast forward to today, we find ourselves, as Marilyn indicated, with in excess of 175, 180 million Americans finding their health care, health insurance, and health services being provided through the employer-sponsored marketplace. Additionally, by way of backdrop, just for context, Cigna is a global health service company. We have the ability and fortune to see health care and health services throughout the world. We're the largest supplier of expatriate benefits for corporations, IGOs like the United Nations or the IMF, as well as NGOs around the world. And then we have infrastructure supplying direct to individual or direct to employer coverage in 30 countries throughout the world. So we get to see a bunch of different perspectives. What I'm going to do is just try to call out three important themes that we think are important to tee up the conversation. One, bright spots and opportunities relative to the way employers are able to design benefits and engagement for individuals. Two, the way in which employers are able to work increasingly in innovative ways with healthcare providers and grab virtual care access for the benefit of their employees and families. And then three, underscore something we probably don't spend enough time talking about, and that is how the employer-sponsored system enables a more effective and efficient delivery of Medicare and Medicaid through subsidies and innovation forces. Before I jump into those 3 points, I think it's also important to recognize the recent announcement last week where 3 large corporations indicated they were going to band together to try to figure out how they could accelerate innovation in the employer-sponsored marketplace. I think if you pause and recognize that announcement, to me it underscores a few things. One, the imperative for further innovation to drive more value for individuals as well as for employers in terms of cost, quality, and accessibility. Two, the imperative to drive that on an accelerated basis. But I think 3, very importantly, the opportunity those 3 large organizations see to drive further success. So from our point of view, we see more positives than not relative to the role of the employer or employers to continue to drive innovation, but do it on an accelerated basis. So point 1, where are some of the bright spots of what employers are doing today and can continue to do? As Marilyn briefly referenced, the ability to design benefits that work for that population at that point in time, aligned with the employer's culture, health burden, readiness to change, and understanding the localization of where they exist is a very important lever that employers could drive uniquely. Whether it's the most innovative chronic care programs for a diabetic population, whether it's looking to get evolved programs to avoid or manage low back pain, to get both presenteeism, productivity, and overall health, whether it's innovate benefit programs for at-risk maternity events to help expecting moms go full term, or whether it's to drive incentives and further engagement in preventative care because we have gaps in care that we could close as a country. Employers are increasingly finding ways to, on a very personalized and innovative basis, design the programs that work for their company, their culture, their health burden, and their readiness to change, and do so on a very localized basis. Point 2, employers are uniquely positioned to put in place the network or the access profile that works best for their employees in a very localized fashion. Whether it's engaging in and adopting more value-based programs like collaborative accountable care programs, At Cigna, we have 500 collaborative accountable care relationships up and running in the United States, spanning 33 states. Increasingly, employers are finding those solutions as either preferred and incented or exclusive solutions to provide more value for their employees, because the healthcare professionals are being not just rewarded, but supported with information and care extenders like nurses, health coaches, nutritionalists, and behavioralists to provide better value-based care. Employers are uniquely positioned to harness the access point that works best for them. Second is on-site programs. Employers are increasingly not just putting in place clinics, but in some cases pharmacies or on-site health coaches to more effectively engage their coworkers, target gaps in care, target opportunities to increase the value of care delivery, as well as to provide guidance back to some of those higher value collaborative accountable care relationships or performance-based relationships. And third, increasingly employers are finding the opportunity to tap into technology differently, whether it's digital apps on through virtual care delivery and everything in between. The employer is uniquely positioned to figure out how to harness the best of those access, accessibility, and value-based equations to work for their employees at a given point in time. When you wrap around that the employer owns not just the strategy, but also the communication and incentive structure, you have a lot of power to be able to align for the most innovative employers, the benefit strategies, the communications, the incentive structure, and then the network access. And then third, before I move to wrap up in a moment or two, I think what's least discussed is the power and the importance of the U.S. commercial employer marketplace as it relates to helping the U.S. healthcare delivery system continue to work. As Marilyn indicated, approximately 180 million people get access to their health services and health insurance through the commercial and the employer marketplace. It is very well known that the reimbursement or reward structure to healthcare providers, be they hospitals, physicians, or other healthcare professionals, is at a higher rate for the commercial marketplace than it is for Medicare or Medicaid. Said otherwise, without a vibrant employer-sponsored marketplace, the overall healthcare delivery system would not be able to deliver the services it's delivering today for Medicare, Medicaid, the Medicare-Medicaid dual eligibles, or other subsets of populations. So the employer-sponsored marketplace serves as an important force of innovation and change, but also a force of financial stability for hospitals, physician partners, and delivery systems around the country to make the overall ecosystem around healthcare access work for over 300 million people. So to summarize, no doubt we live in interesting dynamic times and change will be consistent. Employers sit in a position to continue to drive innovative engagement programs around benefit design, incentives, and communication strategies, coupled with network designs or access profiles to harness value-based care programs, to harness virtual care, and to harness, where appropriate, on-site care resources for the benefit of their employees to deliver better outcomes and better value. Additionally, we recognize as a society that a vibrant employer-sponsored marketplace is not just important for those 180 million Americans, but it's important for the overall healthcare ecosystem. On a final note, if you look at what's common throughout my comments, it's essentially one basic word: alignment. How can an employer help to further alignment with, first and foremost, their coworkers to engage, incentivize, and support them through their life and health journey, from the healthy at risk, chronic, or acute? And additionally, how can they evolve programs to drive alignment with healthcare professionals, to engage, incentivize, and support healthcare professionals to deliver better value-based care for the benefit of their patients, on employers, coworkers, as we like to think about it, our customers. The good news is there's a lot of bright spots, not perfection, but a lot of bright spots, and forums like this help us to understand those bright spots and the ability to further fuel those bright spots as we go forward, because we recognize that all healthcare is highly personal and highly localized, and again, an employer is in a unique position to harness that localization and that personalization of healthcare delivery. I invite you all to enjoy the session today. As Marilyn referenced, there's a great group of panelists to facilitate two very important dialogue points. And on behalf of Cigna, we appreciate your interest in this very important topic as we try to be a positive force of innovation and change as we look forward. Thank you, and enjoy the rest of the expo.
Thank you, David. Thank you to Cigna for being such a good partner with AHIP, but also for your leadership in the the employer market. I'm David Merritt. I'm Executive VP at AHIP. Thank you again for coming. You've heard David mention several times, you've heard Marilyn mention it too, 180 million Americans. It's a lot of people who get their coverage through their employer. Prescription drugs, wellness programs, emergency care, you name it. Those are the benefits and the value that employers deliver every single day to millions of people across the country. Now, coverage is always in the news. It seems like it's never ending when we're talking about insurance coverage, but one aspect that we often overlook is what do consumers think about their coverage? And in this case, we wanted to find out what consumers think and what they believe today about their employer-provided coverage. So we commissioned some research through Luntz Global Partners. Fascinating findings we're going to discuss here today. Confirms a lot that we already know, but it also offers new insights into what people are thinking about their coverage today. So with that, I'd like to invite the panelists to come up. Phil Morris is Vice President at Luntz Global Partners, who's going to walk us through a lot of the research this morning. Thank you, Phil. Julie Rovner is with Kaiser Health News. I'm sure we all read Julie's stuff every single day. Tracy Watts is with Mercer, one of the leading consulting firms in the United States, and Senator Don Nichols, former senator from Oklahoma, now CEO and chair of the Nichols Group. So thank you guys for joining us this morning. You have some top-line results in your packet, but I was going to turn the stage over to Phil Morris just for a few minutes to walk you through some of the key findings of this research, some of the interesting takeaways, and also provide a good overview of where Americans are with their employer-provided coverage. So Phil, why don't you walk us through some of the findings?
Thanks, David. Great to be here. Just to frame our discussion this morning, I'm going to walk through just the 10 most essential findings and insights from the research that we hope folks here will find useful. The first of which, most folks with employer-provided coverage are satisfied with both the health insurance system and they're even more satisfied with their health insurance plan. This is remarkable because it's in stark contrast to some of the research we do with health insurance consumers generally. Folks who have plans through their employer, folks who purchase coverage on their own through exchanges, folks who have coverage through Medicare and Medicare. We obviously hear about how frustrated folks are with the system, but what we see is for that 180 million David reference, for the majority of folks, the system is actually working quite well for them. The second is they remain concerned about rising costs. We obviously continue to hear a lot about the rising costs of care, and what this tells us really is that despite their satisfaction, they're first not immune to the rising cost of healthcare products and services, right? Folks are concerned. 79% of those we surveyed say they expect the cost of insurance to rise over the next few years, not decline or even stay the same. Benefits are more important than the cost of plans. This was an interesting finding because this also contradicts what we would have found, say, 10 years ago, asking this exact same question. When we make folks choose, when we ask them, which plan would you choose? A plan that is comprehensive and offers all of the coverage you need but comes at a higher cost, or a plan that's affordable but doesn't necessarily cover every service you need? Nearly 60% of consumers say they would prefer a plan that's comprehensive and are willing to pay more for that. When we have done this research literally a decade ago, it was all about affordability. And we see that folks are so much more aware of benefits, and they've only risen in importance, especially with a lot of the public dialogue and debate around the Affordable Care Act. The benefits that matter most to consumers. Number one, prescription drugs. That shouldn't come as much of a surprise. Obviously, consumers are feeling the cost pressure when it comes to prescription drugs. Number two, preventive care. What we see throughout this research is that consumers are taking a more active role in their health than they ever have before. And so preventive care, we consistently see now over the last several years rise right at the top of benefits they value most. And number three, emergency care. Consumers obviously want to make sure that their plans have their back when they need it most. And the good news is we see they feel plans do have their back and are covering the vast majority of their medical costs. Number five, they want to see businesses and plans working together to improve health and lower costs. What we see in our research is that consumers or voters really writ large don't see any one entity as able to solve the cost issue or as able alone to improve health outcomes. They're looking for folks in the industry to work together, and they particularly give a lot of credit to and are looking for employers and plans to partner to incentivize wellness, to bring down costs. And we've even measured in here, it dramatically improves their favorability of their employer when they hear about some of the initiatives they're doing and how they're working together and partnering, and also for plans. Number 6, employer-provided coverage is important for recruiting, but even more important for retention. We know in our research, particularly with business owners nationwide, that recruiting and retention are among the top 3 business challenges any business faces. And what we see is employer-provided coverage is playing such a dramatic role in addressing both of those challenges. We see nearly half of folks tell us that they chose their current job based on the coverage that their employer provides, and we see an overwhelming majority say that it remains impactful in them staying in their current job. And so the retention piece is critical here. Consumers underestimate employer contributions, but employer favorability significantly increases with knowledge. We ask consumers nationwide how much they think their employer is paying into their insurance coverage. And what we found is that the vast majority, nearly 80% of folks, underestimate what is actually being contributed by the employer. When we then told them in a follow-up question that 70 to 80% of their costs are covered, are paid for by their employer, their favorability of their employer significantly increases. And so there's an opportunity to really educate folks. They give employers credit, and they obviously feel that their premiums are reasonable and that plans are doing a good job in the employer-provided market. The top value-added services employers can provide. We tested everything here from worksite clinics to wearable health technology, biometric screenings, all of the things that we're seeing employers and plans partner to deliver. And what matters most, what they value more than anything are 1, wellness discounts, and 2, health or flexible savings accounts. This theme we see here is all about control. If our healthcare research tells us anything, it's that the single most important thing they're looking for in healthcare is more control over their insurance and their options. And so here, in terms of wellness, being rewarded for being active and even proactive in their health. And on health or flexible savings accounts, folks are obviously wanting to choose where they spend their money and obviously want to be incentivized to lower costs. The last 2 here, we asked a few policy-related questions in here, and I'm sure that's of interest to many of the folks in this room. The first of those, we wanted to measure how they feel about proposals to tax employer-provided plans. What we see overwhelmingly is that they oppose taxing employer-provided plans. For them, and I mentioned before how this plays such an important role in both recruiting and retention. For them, their insurance coverage is nearly as important as their wages. And so when they hear anything about taxing plans, to them it's viewed as a threat, and they're very satisfied, obviously, with the system as it currently stands. It's working well for them. This last one here, we asked them which they trusted more to lower costs, since we know cost is such an important priority for folks. Is it greater market competition, or is it greater government involvement? Again, to lower costs. What we see here is that nearly 60% of Americans say that they trust greater market competition than greater federal government involvement to lower costs. Now, obviously, when we break that down and look at that politically, we see differences where a majority of Democrats say government involvement, an overwhelming majority of Republicans tell us greater market competition, but those swing voters in the middle, also a majority tell us market competition. That's what's really driving that result there. So with that, I'll turn it back to David to lead our discussion. Look forward to all of your questions.
Great, wonderful. Thank you for the good overview. One follow-up question to kick us off, though. We often hear cost is the #1 concern for consumers, no matter where they get their coverage. Here, though, and this was reflected in the survey as well, I think it was 60-something% said that they were concerned about costs. However, when you ask the question about what they personally pay for their own current health plan, more than half said that they paid a reasonable cost. How do you explain the disconnect between what people think writ large about costs, but then what they think about what they pay with their own personal plan?
Yeah, that's a great question. I think much of the narrative and much of what we hear about, and even much of the research that's out there, focuses on the entire general market. That includes folks, obviously, who have employer-provided plans, but also folks who are purchasing on their own through the exchanges or who are covered by Medicare or Medicaid. And when we look at those folks generally, we do see that they feel costs are very high, particularly in folks who are purchasing on their own in the marketplace. But when we really segment out that majority, that 180 million who have coverage through their employer, we see that they feel their premiums are reasonable, and they don't even realize how much their employer is obviously contributing to make sure that that's the case, but their favorability biases as they know more. So there's definitely a dichotomy in terms of what we see in the research that's publicly available. We hope that this sort of refocuses the conversation on that majority and what both plans and employers are doing to serve their needs.
Great, thank you. Julie, you've covered healthcare for a long time. We miss hearing your voice on NPR, though you still occasionally have cameos. From a news perspective, from a journalist perspective, what do you think is most newsworthy about the findings that you've seen?
Well, I don't know if there was anything specific in the findings, although, when you talk about, do you think that what you're paying is reasonable? I think that you sort of hit it. Reasonable compared to what? We've seen so much attention paid to the individual market, particularly here in Washington these past couple of years. People sort of writ large don't understand that we're not talking about the vast majority of people with employer coverage. We're talking about the 17 or 18 million people who are buying their own coverage. And compared to that, whatever you're paying for your employer insurance looks quite reasonable. Because there's been this sort of disconnect between the individual market where people are basically paying it all themselves or getting help from the government, and the employer market where, as you say, the employers are paying usually the vast majority, and most of the workers don't even know that. So I think things do look reasonable. I really think that that's important in the context of we have spent so much time talking about the individual market that we're kind of ignoring the place where most people still get their health insurance. And I think it's important to kind of, look at that. I wish these were sort of better broken down between large and small. I know that there was sort of an arbitrary cutoff at 100. And I'd also like to see sort of the differentials between people who use a lot of healthcare and people who don't use very much. Because obviously if you don't use a lot of healthcare, you're probably pretty satisfied with your plan as long as, your premiums aren't too high.
And David, if I could actually, that's a great point. When you mention folks who are actually using their coverage, since granted the vast majority use it minimally or annually really, what we do see is when we segment out in the crosstabs, folks who have chronic conditions, who are high volume users of these plans, their satisfaction with both the system and with their plan is as high as it gets. Across all of these key metrics we're looking at, we see a noticeable jump in terms of folks who are using those services a lot. So something we talked a bit about more later, but I think it's an important point because the actual users here really are perceiving even more value than most consumers.
Senator Nichols, one of the two of the points that Phil went through had to do with politics. You have a little bit of experience in this field. I'm curious to know your thoughts from a political perspective. We've heard the issue of taxing employer plans for a long time. Certainly Senator McCain made that a priority in his 2008 race. Given that that's been, there's been a lot of baggage that's been accumulated since 2008, but that proposal has sustained, and folks occasionally go back to that as a major idea for reforming healthcare. What are your thoughts on the viability of that proposal, and is that even possible in today's political environment?
Well, it's interesting. There was a big tax bill last year, in case you didn't notice, and that wasn't on the table. It wasn't on the table in the House. It wasn't on the table in the Senate. And I think maybe this poll is the reason why. It'd be very, very unpopular to have a big tax on healthcare plans. And that's one of the reasons why I guess the House and the Senate said, no, we're not going to go there. It would be very unpopular, and people that would do that would do it at great political risk. And
so why does that solution seem to always come around when we're talking about health reform?
Well, it's always out there. I mean, you always have that. You always have limits on deductibility for home insurance and so on. Those are some big items that you could raise a lot of revenue if you said, hey, we're going to tax all healthcare plans. That's a big item, but it's also very unpopular. So I think it's one of the reasons why it's there. There's so-called blue book and alternatives on how you can adjust the tax code and so on. It just happens to be one of the least popular, and Democrats and Republicans would probably unite against it pretty strongly. You do have this issue of the Cadillac tax as part of the President Obama's health care package, and you might notice it keeps getting postponed. it's never effective. It keeps getting postponed, and I would expect that it would eventually be repealed or further postponed in upcoming legislation.
So the other question I mentioned was how possible it is to do major change right now, given the politics here in Washington. Having served in the Senate for 24 years, you saw this up close and personal. You guys passed major tax legislation. You passed a lot of significant legislation when you were there. Seems like we're having a difficult time passing even small pieces of legislation at this point. What are your views on where politics are now, and is there an appetite or a possibility of approaching any kind of significant health reform?
Well, where politics are right now is very disheartening. The Senate is pretty dysfunctional. They did get a big tax bill through, but the Senate's not working. I was in the Senate for 24 years, and we never had a filibuster on an appropriation bill. Never had a filibuster on a motion to proceed. Julie covered this when I was there. We never had a filibuster on a federal judge. We never had anything like it is happening now. Now there's a filibuster on a motion to proceed on a non-controversial nominee. It is really, I started to use the word pathetic, but it really is troublesome. And so it makes it very difficult to get things through. And everybody says, well, it takes 60 votes to do anything in the Senate. It didn't my entire career. We passed most all legislation with 51 votes. Every once in a while there'd be a filibuster, but very seldom. And so I hate to see what has transpired. I think it's very bad for the country, very, very bad for the Senate. I love the Senate. I spent a lot of time there, and I want it to function. I want it to work, and so it makes it extraordinarily difficult to pass something like healthcare. Healthcare is such a challenge. It affects everybody's lives, and Julie mentioned that everybody, there's 180 million lives that are impacted by employer-sponsored healthcare. This is important. And if you're going to make changes on it, it needs to be done in a bipartisan way. You need to have hearings. You need to have a markup. You need to have it reported out of committee. You need to have lots of amendments. Part of the dysfunction, I think, that really happened, anytime one party really tries to railroad something through using reconciliation, expedited procedures, not allowing amendments, not allowing the minority. When the health care bill, when Obamacare passed, when that passed the Senate, it was actually, I'll give Senator Baucus credit, they did have a markup in the Finance Committee, but then it was rewritten by the Democrats without any Republican input and without any amendments on the floor. That really kind of broke the back, in my opinion, of the Senate. You just have to, I think the solution, whether it's immigration, taxes, healthcare, you name it, I think the solution is you have to do regular order, you have to allow minority and majority to have lots of amendments. That's kind of a cleansing process to have Congress work and have it last. If not, if you railroad it through, well, the next time there's a party switch, the other side's going to want to undo it all, and so you don't have any stability in the process. So I hope there's a return to regular order, and so it can function, and it needs to function. It's important for the Senate to function.
So those were good perspectives on what's not working, but Tracy, you've worked with many Fortune 500 companies on many solutions that are working. Based on what you've heard about the results after reading through them, hearing more context, what are your thoughts as far as the results, and do they confirm or do they differ from your experience working with employers?
It very much confirms our experience working with employers. And I think the one thing that I was drawn to that is mirrored in one of our surveys called Inside Employees' Minds is that 90% of American workers say that getting health insurance from their employer is just as important as their paycheck. And I think that is just amplified throughout the survey. I was thrilled to see the preference for market-based solutions over federal solutions. And I was also really pleased to see that over half get what the impact of taxing their benefits could be, meaning it would impact their economic situation adversely, and they also fear that it would cause their employer to decrease the level of benefits that they provide. And I think that those are important things for our lawmakers and regulators to keep in mind as they do their work. So all of that is just really important. I'll make one comment about the fact that we are a target whenever the tax conversations come up. The American Benefits Council published a white paper along with their 50th anniversary celebration, and there was a factoid in there that's really stuck with me, and that is for every dollar of a tax break that American companies get for providing health care benefits, they give their workers $4.61 of value in health care. And I'd say that's a pretty darn good ROI.
Fascinating. Phil, you mentioned other research that you've done that supports some of these findings or doesn't in some cases. Based on what you've seen in other research that you've conducted and that other firms have conducted, what were the most significant differences that you saw between this one and previous research out there on employer coverage?
I'm glad you asked. I think the very first finding, when I talked about how satisfied folks in the employer market are, both with the system and with their plan, particularly the system, that contradicts the vast majority of our research when we look at just the general market. So when we are surveying folks who have employer coverage but also have coverage from the individual market or have coverage through Medicare or Medicaid, a majority of them are actually dissatisfied with the system as it stands today. They are satisfied with their plan, and that's where we see some commonality. But a majority are dissatisfied with the system, and here we obviously see a very different story with the majority of folks saying that they are satisfied with the system. And it's a shame because, again, I mentioned this before, but so much of the coverage and so much of what we know about these consumers are that they are unhappy, that the system is broken, and so it was striking for us to see the intensity even of support for the way things are. We're looking at it, and for folks who have the data in front of them, we're looking at folks who say they are totally satisfied or mostly satisfied with their coverage. Over half are in that category. That's a pretty high bar when we're talking about coverage. So I would say there, and then the only other one I would mention, really when we're talking about benefits and costs, we used to see when we asked a question like this nationwide that folks would always prioritize affordability in their coverage over benefits. And if we have a hypothesis, really in our focus groups, it's around the public discourse around the Affordable Care Act that we really started to see this new hyper focus on benefits. Folks being more aware of what benefits are covered in their plans than at any point we had measured. And being more concerned about them, now wanting more benefits. And that's why you see not just the essential benefits they have, but even those value-added services are so important to folks now, more important than that would have been the case 5-10 years ago.
Good, interesting. Julie, David Cordani mentioned there's room to always room for improvement, particularly in when you're talking health insurance. Given that the consumer sentiment is so focused on costs as well as benefits, Kaiser has done a very nice job in putting the consumer's voice first and trying to tell very complicated policy discussions from a consumer standpoint. What are some of the solutions out there that you think are possible that can actually address the cost crisis?
I think one of the big frustrations right now is how unequal it is. I mean, it depends, even within the world of employer-provided insurance, you've got, the jumbo employers who generally offer very rich benefit packages. And, we were hearing about some of the on-site clinics and, and on-site pharmacies, ways to not just make it more affordable for people to get health care, but literally ways to make it easier for people to get health care, as opposed to some of the smaller businesses who are struggling to afford health insurance for their workers, or they're asking their workers to pay the vast majority of it. And those are the people that have the multi-$1,000 deductibles. So I think one sort of an overriding concern that we're seeing is this sort of inequality. Having health insurance doesn't necessarily mean the same thing to the same people, even if you have employer-provided health insurance. So I think there's a lot of, we're seeing sort of different kinds of solutions at different levels. Obviously, the larger employers are in some ways more concerned about cost because it's such a huge amount that they're spending. I think that's why we're seeing the, sort of the Amazon, Berkshire Hathaways, JP Morgan Chases of the world trying to do something about this. But as I mentioned, it's really the smallest employers who have the most trouble affording it because it's just a bigger percentage of what they're bringing in. So I think that the things that could really help some even employers trying to provide health insurance are different depending on the situation of the employer.
I have a couple more questions, but we are going to open it up to the audience in just a couple of moments. Julie mentioned what are some of those solutions. What are some of the solutions that Republicans and Democrats can actually agree upon? If they both agree that it's perilous to tax health benefits, they disagree on Obamacare, they disagree on lots of other things, where is there common ground between Republicans and Democrats when it comes to health care at this point?
Maybe the $50 question. Well, I think there's some things they can do. And again, I'm a believer in the process. I would like to see them, okay, let's mark up the bill. See where the votes are. See what they can come up with. I do think in the tax front, there's going to be, I think there's probably support. They just, in the Republican bill, just signed, they delay the health insurance tax. The Cadillac tax has been postponed. So I'm guessing there would be bipartisan support for that alone. I think there's lots of other areas if they can get into the functionality of Congress, they can come up with some things to make things better. I love some of the things, the innovation that is happening that David Cordani mentioned, some of the innovation, some of the the ability of people to be able to monitor the plans on their apps and so on, be able to get better care. The fact that Julie mentioned some employers are now providing care basically in-house and the availability of clinics and the accessibility of the, just lots of things that are happening that I think we can make some efficiencies and improvements through IT and other areas that can really improve, make sure that we're making some real improvements in quality, making sure people are getting the right care, the right definition, the healthcare advances that are happening, through identification and cellular problems are really astounding. The ability to be able to go after some diseases that we've had no luck with in the past, such as Alzheimer's and others, this is the real start of I think significant healthcare improvement possibilities for the next 10 or 20 years. I think are going to be mind-boggling. Whether you're talking about cancer or diabetes, you name it. There's, I think, some improvements, and I think actually. And David mentioned this, the employer-sponsored plans, in fact, we were talking about 180 million people, and Julie mentioned all the focus in Congress was basically how we're going to regulate the individual market, and maybe some discussion on what they're going to do on Medicaid. They kind of missed some of the real foundation that employer-sponsored care actually stabilizes the whole market, gives a real base and foundation for basically all the providers, whether you're talking about doctors, hospitals, and so on, that I think makes it possible to make a lot of the progress for the future.
Tracy, we've talked a lot about what consumers think and what employees think with some of the research from Phil. From an employer perspective, does this research match up with what employers and businesses think about healthcare? Because I mean, let's face it, costs have been a concern for employers for a long time, but looking forward, how do they feel about coverage moving forward, and what are some of the innovations that they are actually looking at to try and address costs as well?
Yeah, so, always employers are trying to strike that very delicate balance between wanting to provide very comprehensive benefits and the cost of doing so. And for my entire career has been built around strategies to reinforce that delicate balance and help people be healthy, get the care that they need, and have it be high quality with the right outcomes because they want their workers back at work. So, a very rich history there of employer innovations. We sort of noticed a gap as we were working the Hill on other issues around the excise tax, just in the knowledge of employers' role in innovation and driving innovation. David Cardani referred to it several times in terms of the employer drive for us to find better ways to do things. And so we've partnered with the American Benefits Council to publish a white paper on employer innovations in healthcare. It's a lot of case studies and stories about what employers are doing and how they're changing the market. A lot of the great things that happen, at least it's my belief, are driven by large employers and good ideas that they have, opportunities that they see within their population to make things better. And the next thing you know, they pilot something, it works well, then their insurance carrier decides this is a good idea, let's do it for everybody, and the next thing you know, we all have access to it. And so it's not just a jumbo employer solution, but it helps everybody. And I think that the largest of the companies here in America take that role very seriously when you look at how they're staffed and the people that are leading those efforts. They live this every single day, and they're always looking for a way to do it better. And I think we all benefit from that.
David, just one last thing on that. We also do a lot of polling with business owners themselves. One of the most striking things I think we learned this year, and we're only recently starting to see this, is when we ask business owners what is most important in terms of the reason they are offering the benefits package that they are for their employees. Is it what it does for their business's bottom line, or is it what it does for their actual employees? Years ago when we asked that question, it was about the bottom line. Now that employees are viewing benefits as important as their wages, we actually see an overwhelming majority say, when I am making that decision in terms of what to offer my employees, I am first and foremost thinking about what it's going to deliver for the employee, even more so than my own bottom line. And so that lack of self-interest, which I think is very counterintuitive to most, reflects just what a shift there's been from the employer perspective of really making sure that the benefits they offer are competitive, because they're seeing real returns on both the recruiting and the retention side by offering competitive plans.
Good perspectives. All right, we have a couple of mics that we can get ready to pass around for questions. If you do have a question, please mention your name and your organization, so a mic will come to find you. And one preview I'd also mention for the second panel, there are some terrific panelists who can go into a lot of detail around some of those solutions, some of those innovations. So you'll hear more specifics on that front. There's a question right here in the middle.
Hi, I'm Dr. Caroline Pomplin. I'm a primary care physician. Do employers feel they're getting their arms around the rising prescription costs, especially of specialized drugs for cancer, for instance?
Very good question. I'd probably turn to Tracy. You're on the front line.
So according to our most recent survey, the top two concerns of employers and the things that they're most focused on from a strategic perspective are high cost claims and the cost of specialty drugs, and they're both kind of intertwined. In terms of have employers, cracked the nut on that, I think we're just beginning to understand how that works and what the things are to focus on. So whether it is site of care for certain types of specialty meds, or other therapies that may be available that you want to try first, or even genetic testing to be sure that that specialty drug is the right thing for you. It's something new that we're all learning and exploring and trying to better understand. Should that be done through the medical plan or through the PBM? There's a lot of issues there, but certainly as we see what the pipeline is for more specialty drugs that will hit the market, they see that as a very important area to be focused on and to be creative in the best way to be able to afford those drugs.
Julie, I know Kaiser's done a lot of work and a lot of coverage around the rising cost of prescription drugs. What are your perspectives on how that plays into employer-provided coverage?
Well, I don't know how much leverage employers have. I mean, obviously, in some cases they do, but I think this is a really difficult issue. As the senator said, Congress, keeps talking about drug prices, but they haven't been able to do anything about drug prices, and yet the prices keep going up. And in the end, it is, it's the employers who then pay the bill and pass it back along to their customers and their employees. So we've got sort of a hot potato going on with drug prices about who's going to actually buckle down and do something about them.
I'd also say that on this particular issue, your last point, Phil, from the research around competition versus government involvement, we've seen previous research around this particular issue on prescription drugs. Americans believe that competition is the key to getting prices down, not more government intervention.
David, I might just add, Congress does have a play. If you look at the Part D benefit that Congress passed last year or so, 2003 or something, we basically wanted to have it be market driven, not have federal price control. And frankly, it worked. Costs came in a lot less than anticipated because it was a market driven approach. A lot of people, primarily the Democrats, said, no, we need to switch that, and we need to have the Fed, and including President Trump, I might add, has always said the government should be more involved on the price side, and a lot of us really rejected that argument, and I think it's been proven successfully. That doesn't mean there's not some abuses. We've seen some specialty drugs. We've seen a couple of companies that just have abused the situation. I think they paid a penalty. One of them's in jail or going there. But so there is a problem. Sometimes there is a challenge. But overall, I think the market is a much better mechanism for delivering value and getting needed drugs to people that need it. And so anyway, I just make that
Great. The question in the back?
Thank you. Tom Miller, American Enterprise Institute. Question primarily for Phil. In your polling, you seem to indicate that folks don't know how wonderful these benefits are and how much they're being given by the employers. For about at least 5-6 years, we've had a federal requirement from the ACA. It was delayed for a while and was limited only to 250 W-2s and above. That basically discloses that information to workers at least once a year, if not more often. And employers could also voluntarily provide this information. I know we have a literacy problem in the country, but that seems like a little bit of a mismatch. And I'm wondering whether in your demographics, when you say it's demographically weighted for the people receiving employer coverage, was it weighted also for the percentage relative to the size of the employer?
So it was, just to take the second part of that first, it was weighted based on size of the employer, but to really get at the heart of your question, I mentioned obviously folks are more informed than they've ever been about their coverage, but there still is an information gap. And I would say we even tested, and you'll probably see reflected in the material you have, what are the channels that folks are using to get this information? What we're seeing is mailers and things that outline those benefits are not very effective. Folks are tuning out. They're not actually reading them. Where they're going for information is primarily online, and even when we look at online channels, it's really a website they want to go that has all of the essential information they need. What was fascinating is when we even break this out by age, I think conventional wisdom would say that it's mostly younger Americans who are seeking out that information online and older Americans using more traditional sources. We see actually the opposite. We see that the website is even a more of a primary source for older Americans than it is for younger Americans. Younger Americans using things like apps and other forms of technology, but the websites playing a critical role in how folks get that information. So I'd say why we see that gap is really we're not meeting consumers where they are with that information. And as we continue to do a better job of that, I think you'll start to see some of that change.
Other questions? There's one over here on the left. We'll come to you in the middle.
Hi, Kim Monk with Capital Alpha Partners. I'd be curious, any of you, your thoughts on the Amazon, Berkshire Hathaway, JP Morgan, Ambergen announcement, and in particular, reports that Jamie Dimon and Jeff Bezos spent the weekend assuring nervous investors that they did not intend to disrupt payers or insurers, and that they would just be forming a group purchasing cooperative. Do you really think that these three companies with their very different workforces can harness their purchasing power, combine it with technology to really disrupt the healthcare system? And if so, which parts of the healthcare system if they're not going to try to disrupt the payer model? Thank you.
Question. Tracy or Julie, do you want to take that?
I asked Tracy about this last week, so.
I think it's really interesting the way that the market reacted because all three of those employers are huge and they're all self-insured. So they're paying their insurance company partners an administrative fee and they're taking the risk for the care that's provided. And so that's very different than the smaller groups that are insured or individual contracts that do very much, impact an insurance company's bottom line. So it seemed like there was a disconnect there, and in the analyst reports that I read, they all pointed that out, that I guess the market didn't read the analyst reports. So that's the first thing. The second thing, though, when you think about employers coming together, we've formed coalitions forever. We've got multiple prescription drug purchasing coalitions. We have a Centers of Excellence to buy stop-loss insurance. So the idea of pooling employers together, and in particular big employers, is an effective way to purchase things because obviously big is big, but even bigger, gives you that leverage. But I think the interesting thing about those three partners is just their core business and what they bring to that discussion about how they want to buy services. And, in what was on the Business Wire, it seemed like they were very much focused on managing costs, which we all are, but also on that patient or employee experience. And when all of us think about our experience shopping on Amazon, that's very different from our experience when we access healthcare delivery. And if somewhere those two could meet in the middle, I think it would be a better place for all of us. So I look forward to what they come up with. I don't know that it's going to be dramatically different, but I'm very interested to see, what it is that they come up with. I don't know if you want to add to that.
I just want to say that I've been fascinated by the reaction. This is the ultimate healthcare Rorschach test. What you saw in that extremely vague press release depended completely on where you were coming from. And you've got some people who think they have an absolute idea of exactly where this is going to go and what it's going to do, and others who said they haven't said what they're going to do yet. Yeah.
The big reveal is coming later, I think. But in general, anyone who can bring new solutions to address costs, we think would be a welcome change. There was a question here in the middle. Yes, sir.
Thank you. Rob Palmer, Wisconsin Physician Service Insurance Corporation. Glad to hear AEI is in the room, because I've been to enough AEI events to know that the reason healthcare is so expensive is because the government provides a subsidy to employers to provide benefits that are too rich. So I'm curious, is any of your surveying, polling that you've seen, research indicated that employees believe their benefits are too rich?
Bill, as the pollster, do you want to take that one?
I'll say this. So we've done obviously plenty of polling on the major medical side and looking at health plans, but also even the voluntary side. And I think this is where you really get an understanding of if folks feel they are overinsured as much as underinsured. I think what we see across the board is that folks are still even looking for more. I think one of the most striking things we learned, particularly on the voluntary side recently, dental and vision being voluntary benefits. What was fascinating to learn, and this was a poll we did earlier this year, folks don't perceive dental and vision as voluntary benefits, particularly dental. They view that as an essential health benefit. That's a paradigm shift, right? That certainly didn't used to be the case. And so I wouldn't say that we're seeing folks feel they're overinsured. If anything, I think what we clearly see in the data is that folks feel they're underinsured, particularly wanting some more of those voluntary benefits even covered in major medical plans.
Thank you.
And as the late Uwe Reinhardt liked to say, Americans will consume as much health care as other people are willing to pay for.
All right, we have time for one last question. We'll go right here in the middle.
Michael Cook, healthcare lawyer, and also a strategic advisor for a startup. On payment reform, what extent do you see the employers putting providers, especially self-insured employers, putting providers at risk with such things as accountable care organizations and bundles, and where do you think they're going to get the most bang for their buck on that?
I'd say I know the next panel can certainly get into that in more detail, but Tracy, since you've talked with so many employers, I'd get your perspective just to preview the second panel.
Yeah, so I'll answer briefly, and then you've got a great panel coming behind us. But so most employers access value-based care arrangements through their insurance company, and And they may or may not even know that they're doing it. But on the jumbo side of employers, there are a handful that are direct contracting with providers and arranging for bundled payments and seeing good results from that. But we're still, I think, very much in kind of the startup of that and the learning phase, and we're not yet at the mainstream application. And even those that do exist, we still have like a ways to go. We're kind of just now getting the right steps into it.
Great, thank you. That's a perfect segue to get to our next panel. There can be much more discussion on that particular topic, but please join me in welcome and thank you. This panel here. Thank you. Appreciate it very much.
Good morning. Oh, there we go. David, thank you so much for your introduction. And on behalf of the Bipartisan Policy Center, I'd like to welcome all of you for joining this morning. We're delighted to be collaborating with AHIP on employer-sponsored coverage, this conversation. As many of you know, and as we learned this morning, employers really play a significant role in our healthcare system, covering about providing about half the coverage for America, providing coverage for about half of the Americans in the United States. And I think if you look, Medicare and Medicaid about 35%, and the individual market around 8-10%, depending on the data that you're looking at. So big role there. And we've done, I know Bill Hoagland is here in the audience, our senior vice president. We've done a lot of work on health in our health program, looking at cost and quality, as well as the work that employers are doing. Our CEO Council on Health and Innovation provided some ideas and strategies for how we can improve the health of individuals, of communities. Haven't talked too much about that, and the healthcare system. And so lots of experience there. So we've got a terrific panel of leaders this morning. Our goal over the next 40 minutes is to really explore innovation. And it was great, David. We had a nice segue through the Q&A, particularly at the end, to talk about what's happening in employer-sponsored programs. What are some of the outcomes? We're also going to explore what are the implications of not having employer-provided coverage in the United States, and are there any policy solutions that are needed, that need to be made? So I'm at our panel. I'm going to briefly introduce each of our panelists. Their bios are in your packets, and then we're going to get right into it. On my right, I'm delighted that Paula Harvey has joined us today. She's the Vice President of Human Resources and Safety at Schulte Building Systems. It's in Hockley, Texas, and she's representing the society, SHRM, the Society for Health Resource Management, and those are the folks, the health benefits, HR folks across the country working with employers. On her right, Brian Marcotte. Brian is the president and CEO of an organization called the National Business Group on Health, and that's a membership group of employers. And he joined that group after nearly 2 decades running leading benefits and compensation at Honeywell. On his right, we've got Mazi Razalnia, who's the president of PAC Health. This is one of those innovative companies that is, using technology in order to improve health, working with employers. So we're looking forward to hearing that. And on his right, I'm so delighted that we have Mary Greeley with us. She's the president of Healthcare Leadership Council. And for those of you that don't know HLC, I know everyone knows about HLC. It's a coalition of CEOs of some of the nation's leading healthcare companies and organizations, and they're doing a lot in the area of innovation. And last but not least, I'm so delighted we have Mark Fendrick, Dr. Mark Fendrick, who comes to us from Michigan. He's the director of the Center for Value-Based Insurance Design, and we're going to hear a little bit about that today, among other things, there at the University of Michigan. So let's get right to it. Brian, I thought I would start with you. I know that you represent a number of large employers, and I know from my days, even my early days at NCQA, working with employers, that employers can really serve as an incubator for innovation. And I was hoping you could share a little bit of your thoughts about what innovations related to our topic today, employer-provided coverage, do you think have made a special notable difference in health and access, and really talk about why.
So employers really are, I think, the backyard for innovation for this health industry. And I would say over the years, you've seen a number of innovations, even if you go back, like it or not, back to the early 90s to managed care. Managed care was a push and innovation with employers and partners, health plans, and others to try to get at the control and try to control healthcare costs. And I think going from there, there's been a lot of innovations going forward. I think so much so, particularly in today's environment, 3.5 years ago, so we started a Health Innovations Forum at the business group. We polled 35 progressive employers. These are the employers that are always pushing the envelope. Again, they're all jumbo, big, self-insured, multi-state, in many cases global employers. And we created more of a Shark Tank type environment to run startups through and innovations through in an approach to accelerate the adoption of new ideas and new innovations with employers. And over the last 3.5 years, we've seen over 70 applications. We've run over 50 companies through this process. And I would say 40 of them have gotten traction with large employers and introductions, about 140 introductions. And now we have pilots all over the place with companies looking to test things out, in some cases just flat out launching some of these innovations, and in others just piloting to see where they would go. And I think it's an example of the appetite of large employers to really push the envelope on how to improve access, how to improve the quality of care employees receive, and how to drive engagement, which is a big issue for employers. And so when I think about categories of areas where we've seen success, I would say the real growing area of digital and virtual health is an incredible explosion in terms of how condition management is being addressed today, how lifestyle management is being addressed today. Number one issue for large employers, in addition to specialty pharmacy and some of the cost issues we've talked about, is engagement. And it's not engagement in the biggie, employee engagement with the company. It's engagement with all of the different resources companies offer to their employees to help them maximize their experience with the delivery system. And the emerging technologies and capabilities that are in the market today to reach people in the moment, either through their mobile device or by pushing communications to them, to engage them at the time they need service or need help, has really helped drive engagement. And we can talk more about what some of those solutions are.
We're really excited to hear that. I think about how technology has changed and how we can do a better job engaging. And you brought up a different point that I've always thought about engaging individuals in their health, but it's really taking that step further. And I know we've got some groups representing physicians here helping individuals engage with their providers. I hope to see more on the horizon there. Paula, I know you've done a lot of work. You've listened to a lot of your members here across the country around their innovations. Can you share some of that with us and some of the outcomes?
Well, one of the biggest things I think is really important for employers, and I represent an employer of 600 employees, is that we have to have flexibility with our systems. In order to be truly innovative, it takes some creativity, but I think flexibility is one of the biggest things. You have to know your employee population, what they want. That includes doing surveys, talking with them. But I think it's even more important is that, don't just sit in an office and, try to figure out what people want, do your numbers and things. Get out and talk to your employees. Find out what is working for them. We changed our benefits broker last year to a group called Higginbotham, and we were very, very pleased that they are just way more hands-on, and they put a very robust program called Benefits Enhanced for us, which is a employee self-service online program. And it's just been really important for our employees to get that opportunity to get online, do those things. And I work with employees that are in manufacturing. and there's a lot of them that are not very computer savvy. So it's funny, some of their children will call us up and talk to my benefit manager and say, how do you do this, and try to things. One of the big statistics that I pulled up that I found very, very important was that we only had 20% of our employees getting an annual physical. And so I realized that is an issue.
Yeah.
And so we need to move that needle. So in our open enrollments, we spent a lot of time educating our employees on that piece, saying, yes, guys, you can go to the doctor. It's not a bad thing. They're going to be nice to you. It's okay. And that was a really important piece. And then so I started talking, in preparation for this, I started talking to a lot of my we call ourselves Shermies, and we're in a group called the #HR Tribe. And so we talked to each other. And one company, they told me this fantastic thing they're doing with getting these stand-up office computer systems. And they have all this, you have to fill in a wellness survey, you have to get points. And so they have this big thing when you have earned yourself this stand-up desk, and it's a great thing. Another one, just like myself, I'm always wearing my Fitbit, and I have been for 2.5 years now, and I was so excited on Sunday I did 15,000 steps. And so it's really important that people are doing those things. My employees, they do challenges with themselves. We have walking trails, and just finding different ways to think about health. We talk about health. We communicate health. And I think that's what I found from a lot of our members is how they're trying to find innovative ways to really get this conversation out. And with my president of my company, one of the biggest things he says is that, cost is one thing, it's kind of there. He says it's more important for him. And what I found other CEOs when I had my consulting business was that they cared about their employees being healthy. Because healthy employees show up to work. And they can work. And so that's important. It's good for business, but it's good as a human thing. And that's what is, I thought was interesting in the other panel, is they really care about having their employees healthy. And I think that's where we need as a country to be, is caring about having healthy employees and moving the needle that we are doing things to be healthier.
Thank you. Mary, we've watched for a long time. Your CEOs you've shared the stories of their innovations in the private sector, and I wonder if you might share some of your thoughts there, number one, but then also with some discussion about moving towards a public program. I mean, are there things that would be especially hard to replace in a public program?
Well, it's been fascinating. So my members tend to be large employers that we've heard discussed, but I personally am a small employer. And so I've seen both worlds, and we really rely on our private health plan to do a lot of those activities that employers are doing. What we would lose if this were all government or more public, I think we just need to do a sort of a head-to-head comparison of what we've seen in terms of benefit design, flexibility, and changes in the private sector versus what it takes to get a change in the Medicare program. So it took about 40 years to get a prescription drug benefit into the Medicare program. And think about it. And this is a population whose health can be much better managed. You can keep them out of the hospital if you can manage those medications. Right now, we're focusing a lot on how can we better treat and, more importantly, prevent chronic disease. Employers have well recognized 85% of our healthcare spend, 85 cents out of every dollar, is going towards the treatment of preventable chronic disease. And so we've seen the use of digital health, monitoring devices, as you just heard Paula mention, and not just the Fitbits, but also patient monitoring devices, whether it's for diabetes or heart monitoring, where the physician can get that information on a real-time basis about patients and do interventions that keep them out of that high-cost setting, the hospital. And again, really working on preventing and treating chronic disease. So it's a very stark comparison for me as to what we would lose that flexibility, we would lose that innovation, that ability to respond, as Senator Nichols said, to the marketplace. And I think more importantly to what do your employees want, and how can you facilitate them getting to that better health.
just another example. I think take telehealth, for example. If you go back 5 years ago, about 14% of large companies offered telehealth to their employees as part of their healthcare benefits. Fast forward to today, 96% of large companies offer telehealth.
That's
And
incredible.
over 50% offer telebehavioral health today, which is a 50% increase over last year, just in terms of the acceleration of those services within the employer market. Now look at telehealth within Medicare. It's only offered in rural areas.
Right.
And not only is it only offered in rural areas, you have to go to an approved facility, whether it's a hospital, outpatient setting, or a physician's office, in order to receive telehealth benefits. When the whole purpose of telehealth is to create more convenience and access, even straight from your home, if that's the most appropriate setting for you. So again, I think when it comes to public versus private, in terms of innovation, nimbleness, acceleration of change, hands down, you're going to see a lot more of that in the private sector.
That is a great example.
Yeah, I think one other really critical difference is, and I call it the ability to vote with your feet. If you're in the private market, whether you're the employer that is choosing who's going to be your benefits manager, if you are not getting value, you can make a choice, you can go elsewhere. If you're in Medicare program, very limited choice. If you're not satisfied, they're not being responsive, you really don't have anywhere to go.
I want to give you a quick little example. This last year, we just added a new benefit that is you can call on the phone and tell them your just basic symptoms. If you have a common cold and it's a $10 more copay, but you don't have to leave work. So you can call, tell them I've got bronchitis or whatever's going on, and if they think they can call in the prescription for you, you can go pick it up, and you miss very little time. And that's a new, innovative way that we're doing something that I didn't even think of years ago.
Well, employees certainly appreciate the convenience. It really helps along a number of fronts. You know, Mary talked about the burden of chronic disease on our nation's healthcare costs and the role of technology. Brian has also talked about that. Mazi, I know you're doing some exciting things. You're innovating in this space. I wonder if you might share some of the outcomes you've seen in your work with employers?
Yeah, absolutely. And a lot of employers come to us with that same frustration that, you know, I'm paying for a lot of chronic conditions. I've done wellness, but it may not necessarily attract or engage individuals who underlying have a chronic or multiple chronic conditions. So one of our goals was to create a better experience. And how are you going to take an individual with the fragmented healthcare system that we do have and allow them to navigate and access the right resources? So very similar to having a financial advisor to talk to you about Roth IRA and 401k plans, and then that whole side of the business of benefits. The similar approach needs to be taken with healthcare, because once you do have a chronic condition, let's just take type 2 diabetes, you know, you have to coordinate your foot doctor, your eye doctor, your primary care, your endocrinologist, your prescriptions, and then certainly your doctor in the 6 minutes that they do have with you, almost on a 3-month basis. They tell you to go and change your lifestyle and run 10 miles. And it's very unrealistic for anyone to do that. So one of the things that we've done is use digital technology, so no usernames, no logins, no apps, and allow individuals to engage with a health advisor to help them navigate not only their condition and you know, address health literacy, but self-management skills, but also navigate all the other fragmented services that are either being offered or that they have to access through the delivery care system. So that's been one of our focus areas, and now after sort of that human element, which is really around empathy, and that's one thing that we're kind of really missing in the healthcare system, just because of the pressures of the healthcare system delivery, is that whole empathy. You know, if you can really get an opportunity to talk to somebody about what the root causes are, is it stress, is it divorce, is it something else that's going on in their life, you start to actually address their conditions and getting them to better health outcomes. So we passed around a case study that we did with University of Alabama's Wellness and Employee Group, and we've been able to reduce A1C by about 0.75 across all of our other employee settings. It's been about 1 percentage point, which is very significant.
improve mental health. Typically, about 55 to 60% of employees that we engage have underlying depression or anxiety that's driving poor outcomes or higher utilization. And we're starting to see that these are chronic diseases, and individuals are now starting to understand how to take their medications by label, by prescription, and not necessarily skipping a dose or having their medication. So a lot of that comes through the coordination of what we provide through digital therapeutics.
So Mark, you have written, studied, researched value-based insurance design. And that really was born out of employer innovation. I wonder if you might talk a little bit about that, and then we're going to move to a little more policy, build on some of Mary's comments.
So first, Marilyn, thank you for inviting me. If I fall off the stage, I have really good employer-based coverage, so I'm right here dangling. And Paula, I set a record in my Fitbit on Sunday, pacing the entire game with the Eagles' victory. So go Eagles for that. Okay, so it's very, very interesting to follow up on all these comments, especially from the first panel. So for Senator Nichols' point, there is no better time to be a clinician in the history of the world in terms of what we could do for our patients and our populations, and we shouldn't forget that as we move forward. I call this Star Wars science. The problem is, with the issues that discussed earlier, particularly the cost of some of these innovations, we are living in a world of Flintstones delivery. And the gap between what we can do and what we do is large, and unfortunately getting larger, not closer, because some of the tensions we have. The good news about this is there's more than enough money in the system. No one is arguing that $3.7 trillion is not enough. We're just spending it in the wrong places. And if we could figure out, instead of talking about how much we spend, how well we spend, we could really move that forward. So what value-based insurance design does, and driven entirely by the private market, is saying we have enough money. How about we buy more of the things for which evidence is based, and not buy the billions of dollars of things that don't make Americans any healthier, right? So what we did is basically set up an insurance product that, instead of making everyone pay the same for every doctor visit, diagnostic test, or drug, the things that are considered good are now lower cost, and the things that are the evidence is weak, such as those things in the Choosing Wisely initiative, we make it a little harder for patients to get. And what we found is, going back, I love saying, to the late last century, if you make people pay more for something, they'll buy less of it. And if you make people buy less for something, they'll buy more of it. And we've seen this reallocation of healthcare delivery systems to things that are aligned with things like NCQA and HEDIS, and now that the areas that clinicians are now rewarded for in their pay-for-performance programs and other types of things. So this has been an intuitive thing, and if Senator Nichols is still here, the answer to David Merritt's question about a bipartisan healthcare reform idea is value-based insurance design. It is one of the very, 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 very few healthcare transformation idea that has had bipartisan political support and now multi-stakeholder support across the board moving forward. I mean, who is not for spending more money on the things that make people healthier and spending less money on the things that don't? It has been implemented not only in thousands of employers, it is a part of one of the most popular part of the Affordable Care Act, that being the removal of cost sharing for high-value preventive services, which is the second most popular aspect of the ACA and now supported by 80% of Republicans. It has been implemented in the Medicare Advantage program, and I just heard earlier that in the funding bill that's likely to go through today, there will be legislation to expand the Medicare Advantage value-based insurance design demonstration to all 50 states, even though it's only 10 now. And value-based insurance design, we're honored to say, is now part of the TRICARE program. So as we see this early aspect of employer-based insurance, now, as David Merritt said earlier, we need to innovate in the commercial market to allow value-based insurance design principles to be incorporated into that highly popular health savings account, which I love. But the fact that it's tied to high deductible health plans, which is not nuanced or flexible, which I don't love, I think we can move forward together as a group to allow to take advantage of all of those things.
I'd like to switch gears a little bit, talk about policy. We've learned in addition, I'm sorry, in the general, I mean, we've heard a lot about outcomes of innovations, and Mark, you had a great segue to our policy discussion, as did Mary. You talked a little bit about what would be the impact of policy that would negatively impact employer-sponsored coverage, and I thought, building on, I think some of the things that you said, flexibility, lack of competition. Brian, you talked about how long it would take. You provided the telemedicine example. Other ideas about unintended consequences or impact from our panelists?
When you're asking about possible policy or current policy or?
If employers provided coverage were adversely impacted by legislation. So we could talk about specific proposals if you'd like, or just the general moving away from employer provided coverage.
Yeah, so I think unintended consequences is a real important part of this. Yeah, and I'll give you a great historical example of that, and then we'll fast forward to where we are today. You go back 25, maybe more than 25 years ago, around 1992 or so, there was policy put forth to really protect, the intent was, let's protect the future retiree medical benefits of our active employee population by requiring employers to book the liability of that future benefit. And so employers booked billions of dollars of liability for future retiree medical benefits and had annual expenses of millions and millions of dollars, in some cases billions of dollars, depending on the size of the company, for the future benefit. And so the intent was, let's protect these benefits that are going to happen in the future. And what happened? Employers all got out of offering retiree medical benefits. If you go back to the 90s, you had probably 2/3 or more of employers who provided retiree medical benefits. You fast forward to today, it's a very small percentage who still provide those benefits. And if they do, they're capped in some way. That's an example. To me, that's the classic example of unintended consequences of legislation. So let's fast forward to today. We have a Cadillac tax that keeps getting kicked down the road. If you think about why it's called a Cadillac tax, it's supposed to be on to tax rich employer benefit plans. I can tell you there aren't the rich employer benefit plans that are out there. Employers have been tweaking plan design for years to try to help offset trend. Benefit plans are still good, but they're not the rich plans that, say, the Cadillac tax was intended to drive efficiencies down by taxing these benefits. If in 2022 now, Cadillac tax goes into effect, more than half of employers say that their primary plan they offer to their employees will trigger that tax. So what are the unintended consequences of that? Could result in further reduced benefits as employers try to keep below that tax or try to mitigate the impact of that tax. I think that's just a perfect example of, let's be careful of trying to put too many rails around what employers are trying to do. They provide these benefits pretty comprehensively for the most part for employees, and they innovate. Let's be careful of the rails we put around those.
Hopefully the other side of it, what we hear a lot from members and patients is that while they have these benefits, it's really hard for them to sometimes take time away from work to go and access those, right? So we all have sick days that we can use, but if we're thinking about increasing vaccination rates or primary care visits, well, why don't we offer individuals healthy days? Take off a day and go and actually, access preventative care services. These are just some of the, low-hanging fruit innovations that you don't have to necessarily use policy or dollars or Fitbits, et cetera, to do. It's just really providing individuals with more flexibility to utilize their benefits. And that's one frustration we hear a lot from members.
I guess my goal would be to either remove barriers or not impose barriers. We've heard a lot about employee-patient engagement. And my concern is that we don't have overly restrictive access to data and data analytics. I mean, this is an exciting new world about how we can improve treatment, personalized treatment, privacy laws, making sure that they're not so restrictive, that you're not able to work with that particular beneficiary or that employee. Always keeping in mind that that information has to be protected and kept secure and safe, and there should be consequences if it is not. But don't impose artificial barriers to being able to work with that patient or employee information. And then in the whole area of value-based contracting, we heard Senator Nichols talk about competition as a way to lower prescription drug prices. We know that if we can speed up the process at the Food and Drug Administration for approval, get more product to market, competition will lower those costs. We saw it with Sovaldi. As soon as there was a new product in the market, those costs went down by 40%. So again, just making sure we maintain flexibility and competition and don't impose artificial barriers to doing that.
Mark, you started this conversation with some policy proposals. Your thoughts on what you heard or
So
other
I
ideas?
think when people talk about consumer engagement, which I love, it's been translated in the marketplace into consumer cost sharing, which I'm not sure I love. So the fact that I want people to pay out of pocket a lot of money for things they don't need. I don't want individuals to have a bake sale to get a drug that was designed to treat their individual tumor. So I think this idea of nuance in that a service depends on who gets it, who provides it, and where is why we need the analytics and the IT that Mozzie talks about moving forward. The interesting part, again, reflecting back on the early, Americans do not care about healthcare costs. They care about what it costs them. And the growth of high deductible health plans has been particularly worrisome to me because they are not nuanced. So the very specific policy proposal is when high deductible health plans tied to HSAs, which I love, because I love saying triple tax advantage, even though I don't know what it means. There were folks like Roy Rantham, who's here at the IRS, who created what was called the safe harbor, for which employers could place certain services that they deemed high value, many of them mentioned today, on a pre-deductible basis. You know, the dreaded health policy experts, the IRS, have made that safe harbor very, very, very small in the fact that the services that I beg my patients to do for chronic diseases, and almost all the services that I'm benchmarked on, cannot be covered on a pre-deductible basis under existing IRS guidance. So we have worked through, since I saw Schoolhouse Rock as a kid, so I figured I'd write a bill or something like that. But we've worked through a multi-stakeholder coalition to not only create legislation, which will hopefully be reintroduced this week, and have worked with the Department of Treasury to allow health plans to keep our flexibility to offer choice to cover things on a more generous basis. So there's nothing mandated. And the fact that I've been talking about this for over a decade, not a single stakeholder group has ever pushed back on this initiative, right? So since Ann Arbor, everything's about football, and certainly with the Eagles, I've been inside the red zone for 4 years. I've been on the 1 yard line for 2 years, and it's just inertia, and I'm hopeful that if you're looking for a bipartisan solution to add choice, to improve quality, which motivates me, and lower total health care costs, this is one.
To piggyback on what we just said, I think there's an opportunity. We heard from Panel 1 that employers are paying 70 to 80% of the healthcare costs for their employees. And one of the other things that we hear from employers is that these high-cost drugs that are on the autoimmune or oncology, we don't know if they're working. We don't know if people are taking it, and then if it is working. So I think there's a possible mandate to say that if you do get sick and you have if you're on a particular medication that is costly and we're paying for it, there are certain things, there are certain requirements, and certain technologies that we want you to also adopt and engage with, so that we can see improvement happening in that employee population. I think sometimes, again, providing choice is great, but there needs to be a carrot and a stick in getting people to engage.
Just to build off on what Mark said, there's a lot I agree with what he said. Employees may not care as much about healthcare costs. They care about their costs. Employers care about healthcare costs.
Yes.
When you're looking at healthcare costs increasing 3 times the rate of general inflation, you're looking at it 2 times the rate of wage increases. They care about it because if you're spending $500 million on healthcare and costs are going up 6-7% gross before you manage it down, you're looking at $35 million of additional costs just for offering the same benefits you offered this current year when you're looking forward. So yes, they are being very innovative and very aggressive in terms of what they could possibly do with the delivery system, with technology, with condition management to try to get at those overall costs. But if you think about what David Cordani said this morning about alignment, The
Yes.
opportunity here is trying to align incentives for consumers with incentives for providers. And that's why you need flexibility around these HSA plan designs, because you don't have that opportunity to align incentives around condition management, around value-based design. And I think if there's one area of legislation besides blowing up the Cadillac tax employers would like to see is flexibility around health savings account designs so we can incent and align incentives with providers to better manage chronic conditions.
Paula, what are your thoughts? Policy improvements, unintended consequences?
There are some policy improvements. One of the things, of course, under ACA, it defines full-time to be 30 hours. And for most employers, including mine, we consider that more like 40. So there is a piece of legislation out there to give the flexibility to go to 40. Because that is usually what most people consider a full-time job, is around 40, 30, could be maybe full-time or part-time, depending on what people are wanting to work and what you're able to offer. The other thing that, because the Cadillac tax, I could talk about that forever, and absolutely. As an employer, we're not really in favor because it keeps many companies from doing more because they said, I don't want to pay that tax. So it keeps them more of just kind of a regular healthcare plan, and you can't be innovative because you can't spend some monies because you're afraid you're going to be taxed here in 2022. But the other thing that we haven't mentioned yet is I did want to mention about reporting. And as an HR person who has a benefits manager who's ready to tear her hair out, and she's got to get all these 1094s and 1095s out, the information that you get sent in the mail about how, which months you were on the benefit plan, there's a lot of reporting requirements. And what we've had to do as an employer is we have to outsource it. It just, I've got a small HR staff, and we just can't afford to do it. We don't have the time, we don't have the bandwidth, so we outsource it, and we got to pay extra money just to do this government paperwork that's essentially there. And there is a piece of legislation called the Common Sense Reporting Act. I'd like to see some more streamlining, definitely, on some of this paperwork that is having to go to our government agencies.
Other thoughts on policy before we go to our audience?
Well, not to get into the weeds, but as we're talking about better adherence to medications, there's a whole regime of fraud and abuse legislation, STARP, anti-kickback, and just kind of a heads up, we're going to be doing a lot of work on that because I don't think we can get where we need to be in a value-based healthcare system if we have these prohibitions of collaboration between providers and patients and manufacturers and others. So just kind of a heads up, it really is something that needs to be addressed. It's a very complex area of the law, but a lot of educating will have to take place. But if you want to provide telemonitoring equipment to a Medicare beneficiary, this is going to get in the way of that, or even some of the things that you want to happen in the private sector. Pharmaceutical company training hospital employees. When that patient is discharged, this is the medication regime. It may not even be for their product, but that is prohibited under the current fraud and abuse laws.
If I could quickly follow on to Brian's last point about, I certainly know and understand the fiscal pressures that employers are under. All of the things that excite me as a clinician, and every one of the things that I am benchmarked on, raises healthcare costs and doesn't lower them. So we have this amazing pressure to serve our patients, which is the Hippocratic oath that I took, but also serve the shareholders or whomever else, the oath that I take, which may be more important to Brian's members. So there is, luckily for us, or unluckily for us, probably $1 trillion in healthcare that we're spending on things that we shouldn't be buying in the first place. There's actually a line in the ACA that no one's ever read except for me that says the secretary has the opportunity to not pay for those services that are designated as harmful by the U.S. Preventive Services Task Force. So in my view, the only way that we create headroom for your members and your members and your company is that to be able to buy the Star Wars science, we have to get serious about reducing low-value care. And thank goodness for Choosing Wisely, which has the physician and other clinician organizations leading the way, but it's ultimately going to be the payers, which are your members, that will say, we no longer need to cover these things for which clinician organizations are saying we shouldn't be doing them in the first place.
So with that, we've got about 10 minutes for questions. I think there's a gentleman here. Someone will come around with a mic. If you'd let us know who you are and who you're with. And
hi, Mark Mead from Selling Underwriters. Just for the people in the room, how many of you are living in Maryland? And do you know that the Maryland legislature 2 years ago passed a law basically outlawing high deductible HSA plans in the insured market? And that there is a legislation having to be pushed through emergency to allow it to occur, but that would not take effect until 2018. That's the cost of legislation that isn't thought out. That's it.
Well, I think it's interesting as we were talking about, wanting employers and health plans to focus on high-value services and not pay for low. The barrier is legislators stepping in and mandating that you cover X, Y, and Z without the scientific proof. So always one of the challenges is, and I think our job is, how do you educate those legislators?
Between what you may see in the public market around high deductible plans and what you see in the employer market. The employer market, most employers, 85–90% of large employers, fund those health savings accounts on an average of, I think it's around $750 per employee and maybe $1,100, $1,200 per family to help offset that high deductible. Because it's not trying to just go to a high deductible, it's really trying to give them the power to how to spend the money and put money into a health savings account to help them spend wisely within a high deductible plan. So some of the actions that could happen at the state level to try to attack a high deductible plan model, they need to understand that most companies put money every year into these health savings accounts to help offset that deductible. And most large employers, because they're self-insured, they can have pretty much a standard benefit. So ERISA protection is, you talk about legislation, ERISA protection is another area that employers are very, very concerned about. They want to preserve so they can have a uniform plan across the country and not be subject to what a state may do to limit their ability to both innovate and provide benefits for their employees.
So here's the rub with that. The rub with that is if you put money in a health savings account, it becomes my money. And all the evidence shows that even though Brian's members are incredibly generous, people are not spending their money on the services that I beg them to do. So the answer to this problem is not making HSAs better. And in this town, HSAs are already beloved. What we have to do is make high deductible health plans better. And I'm saying, so I would just beg to differ with this approach that because there is no evidence now that high deductible health plans either they lower the rate of high value service use and low value service equally. So people don't know how to spend their money wisely. So again, I don't know anyone who's against this idea of making a high deductible health plan a high value health plan, a coined term by Andy Chasen, who's here in the room. And all we need is just to overcome that last 1 yard of inertia to make this happen. I know several of your members who are fully insured HSA, HDHPs, who would love to move their members, their employees, their beneficiaries to a better plan that puts deductibles on services that you should not be buying in the first place.
I don't disagree with that. But HSAs and high deductible plans are linked. I think we use these terms interchangeably often because most employers, when they offer a high deductible plan, offer it with an HSA, the health reimbursement account. So as a result, they're locked, that design on their high deductible plan is locked in to the fact that we're an HSA. I don't disagree that employers would like that flexibility. They want that flexibility so they can provide more high value coverage for those services that make sense, that have the evidence behind them that makes sense.
And I think the assumption is that people know how to spend their money wisely in healthcare and choose the right services. And we're kind of seeing the opposite of that. You know, it's very overwhelming, especially when you have any of these chronic conditions. You know, where do I go next? What do I do? What's the next 10 years of my life going to look like? And that frustration builds up, and what people end up doing is hitting the emergency room or repeating their same old habits.
Yeah, I want to mention that, my company has, made the choice to have, we only offer a PPO. And so it's with a copay and that piece. We actually bid out last year to find out if the high deductible plan, it's going to cost us our plan more. So we decided to stick with the PPO. And what I found, because I was previously on a high deductible plan for many, many years before the company I joined, in the last 2 years, is that if you are on a high deductible plan, you didn't go to the doctor until you were deathly ill, because you knew it was immediately going to be $200 out. Even if your company had the HSA and you've been putting money into the HSA, it was just that, oh my gosh, that big sticker shock, and you didn't go to the doctor. So I found that a lot of people were not getting coverage that they should get, not going to the doctor like they needed to, even doing the preventative, which was, has been covered since 2009, but they just weren't going when they were on a high deductible. They kind of considered it more of a catastrophic versus with the PPO, okay, I pay the $30 copay and I go to the doctor. So that's why my company has made that conscious decision. Besides, also it makes monetary sense to stick with the PPO.
Other questions? Hi, Sean.
So I'm struck by this conversation. So my question is this: based upon your sentiment about the disconnect between human behavior and deductibles, should some level of primary care be a preventive benefit and be offered independent of cost sharing for individuals with high deductible health plans?
Looks like you're looking at me. So primary care is a really tricky issue in the fact that it's extraordinarily broad. So I'd rather turn it over to Mozzie to say that folks like us who have chronic diseases and need to go get things checked should be easily accessible. But the 50% of Americans who generate 3% of spend that we don't talk about, the healthy folks, I do not want them to have unlimited access to primary care providers. In fact, my own society, the Society of General Internal Medicine, puts routine physicals on our list of low-value services because if there's no reason to go, you shouldn't. We've shown in the state of Connecticut, which has put in place one of the best VBID plans for state employees with chronic conditions, we also opened up primary care and actually made it required for every patient to go. We saw a remarkable increase of all the high-value services that I say is a good plan. We almost saw an equal increase of the low-value services that I'm trying to squash. So I'm not saying that we should have access to those providers. I say it should not be easy for the provider or the patient to waste your money.
Yeah, we certainly agree with that. The evidence suggests that just having access to primary care doesn't make you any healthier. And in fact, a lot of the wellness programs that are out there, though they create great culture of healthiness, the people who use them are typically the healthy people, or they create false positives, which actually increase your healthcare costs. So really the focus should be on those people who are driving your healthcare costs, which are the 10 to 15, 20%, driving 50 to 80% of your costs.
And obviously it goes back to the alignment issue, right? What are the services where you want to incent and drive alignment between consumers and providers where the evidence supports it to provide a richer benefit, to create that flow of access? So I think there's a lot of agreement here in terms of these plans need more flexibility to experiment with that to see what we can find out.
And then there are some services that primary care physicians offer, like vaccinations that can be done in different settings. And I think, so going back to looking at, what settings are even appropriate in terms of the services being provided should be a great start, because you don't necessarily need a primary care setting to provide vaccinations.
And your question raises a really interesting, since you mentioned, Janet, disconnects. So 175 million Americans now have access to zero cost sharing on over 80 preventive services. I don't want to tell you about the emails I get from patients. Thank you for the no-cost mammogram. I can't afford the deductible for my mastectomy. Thank you for the free hepatitis C screening test. I don't have access to therapy. And most, sad is the free access to HIV screening, where many patients who were diagnosed have really hard difficulties getting potentially life-saving therapy. So if we are going to expand any of these access, I would like you to think through the entire, what I call episode of care, because I'd rather not know someone has hypertension or hepatitis or depression than know they have it and don't have them access to get evidence-based therapies.
Helpful discussion. Well, we're looking at our time, and I think that we need to wrap up now. What I've taken away from our panel and our conversation is that there is a lot of exciting progress in the private sector that's made possible by employer-sponsored coverage, and there's a lot of discussion underway around policies that are needed. We heard about some of those today, many of which would enjoy bipartisan support. And so with that, please join me in thanking this wonderful panel. Thank you. Thanks very much.
My thanks to the panel, to the previous panel, to everyone who participated today. Three big takeaways that I saw were that, one, the employer market really is working. Can there be improvements? Absolutely. But as the survey data showed and as our panelists demonstrated, employees see the value of the coverage that they get every day. Two, cost remains the number one challenge to solve, unquestionably. Even though our survey's findings found some positives around costs, there are still too many families paying too much for care and coverage, and that's certainly something that we need to solve. And three, there are solutions out there. I mean, you guys just demonstrated the innovations around value, around lowering drug costs, around wellness. There are incentives that can take place that we can implement to lower costs. And I think by working together, we can certainly move the needle forward. So thank you again to Janet, to everyone, to Bipartisan Policy Center for hosting us today, and thank you for attending.